You get it. You're a visionary.
Yeah, the way that's
And plus, visionary. Yeah, it's a year and a half later. So I'm going to working with IDRT, like your everyone. Yeah. And then that's the plan.
There's a plan, right?
That's the plan. And eventually, so that is the plan. And since this was unintentional for me, I literally think that in the future it's not something that can happen, but now I want to change and make it happen.
Why do that comes to you? This is the mental of it. Well, you know, ways to each other up. And people is something wrong. That's one step that takes 5 years of hustling. If you do that, they're gonna do that.
Let's be on that side. Like that's the reason.
So we visit temples.
Yeah.
So this is maybe for some reason the our home where we have water. Yeah, especially your combined one, you have the best. I think we're connected, right?
Yeah. So like I'd like to get
Is it voice?
yeah.
Oh, sorry, my name is Jace. Jaesik. Why did I type my own name? Bernard.
Yeah.
This one?
It's
That's me. The what?
Jae.
Oh, I remember it sounded Korean.
It's like
J-A-E sounds Korean.
yes, Spain.
Oh, that's the thing. Yeah, it's like the Korean. The Ryan is
Yeah,
one of the best,
one of yes, and the other one is in Singapore right now. Focusing on scaling. Yes, and last event he came here.
I told you about
Yes. So at the moment, our progress was it's lost about a year.
yes, welcome space.
What I recall was we're searching for a portfolio
First time
we use for our DeFi, farming, then after that delta neutral trading on GMX, and blah blah blah, all that. But then somehow yeah, quite early. Yeah, so we found out GMX about last year, and we go all the way.
So, you guys,
No. So we're still
Why can't I
searching
see
for
this just
what
like
we
share
call
screen?
we're still weighing the costs and benefits. And since we saw like which screen I said the thing, you know what?
Stop sharing.
Everything book everything and say then go away. Later, no, I mean, right now, I do this here. Ah. Okay, then we go down. What we need to say hi or the event. Okay, 4 o'clock.
I will be
Oh, there they. Yeah, Mr. Laney.
No. Testing, testing. 1, 2, 3. Wait, this one? They can't hear us or?
Yes.
Okay. Bert, could you confirm? Can you hear us? No. Testing, testing, 1, 2, 3. Voice audio.
Yeah,
Hey,
I can hear.
Kunal, how you doing?
I'm doing good, doing good. Can you hear me all right?
Yeah. What about Bert? Can we double check for the audio?
I think it's the mic is muted.
Yeah, I can hear you, Kunal.
Yeah, I can hear all right. You're coming
Okay,
through.
great. That's great. We'll probably get started really soon. So we'll start gathering people on and introduce everybody. So yeah. Good evening, everyone. I am pleased to announce the start of the Great Thorn and Scaling X's DK Roll-Up event. Please take your seats as we start the event and buddy up with your friends that you introduce each other here. I see, hi Andrew. All right. Thanks for coming, guys, and welcome to our online guests. Kunal Amin from Unidix, Bert Rock from Quenta, Anna from Orbit, and there was supposed to be Cole. But yeah, let's get started. Thank you everyone for coming today. Quite a task to have this on, but I'm pleased that you are all here. And so let's make a start. We're also waiting for one of our guests. He's here actually, Sibuk. Welcome, Sibuk. Sibuk is a dev advocate from Starknet and also the developer at Portalgate. So let's make a start. Before I do that, my name is Jae-Sik Choi. I'm the Senior Associate / Portfolio Manager at Greythorn Asset Management. And again, welcome to the newcomers. Please take a seat. Today we'll be doing the Scaling X ZK Hackathon. So thank you, Scaling X. Scaling X is our sister company, a VC out in Singapore and HK, investing and searching for the best projects out there. And in particular, right now, we're going to be talking about the imagination of the ZK future. So this is our agenda today. Welcome to Greythorn again. Greythorn Asset Management started in 2021, but with original roots in 2017. We have a combined experience of 50 years in crypto. I myself have been invested and have been partaking in activities within crypto since 2011. Without further ado, let's kick off the event. And before that, I'd like to introduce to you our director, Ryan Ang. Ryan Ang is our director and one of the founders here at Greythorn Asset Management. And yes, let's start the intros. One sec. Actually, I've already done that a bit more faster than expected. Since we've already introduced each other, I'd like to take the stage for Chi-Chi to come over and talk about the Scaling X ZK Hackathon. So please welcome Chi-Chi.
Yes, hi. I am not in Australia. I am actually in Montenegro. So I'll just give an introduction from the through the internet. Can everybody hear me all right?
Yes. Loud
Oh,
and clear.
amazing. Okay, cool. So hi everyone. Sorry you cannot see me in person, but this is Chichi, who is the co-founder of Scaling X. Just a little bit introduction, so you know that what we do, and then how we can work together if possible. So Scaling X is a Web3 accelerator slash VC focused on blockchain infrastructure, especially zero knowledge, related technology. We manage 20 million without any LP money, just our own money, and we invest in best founders and teams. In addition, we aim to educate and promote blockchain infrastructure. Um, the way we do that is that we empower early stage Web3 startup with talent recruitment, venture capital networking. We know over 100 VCs and public relations, brand building, community building, etc. So recently we just uh, you know hosted a hackathon, and we're actually going to have our demo day in a few days. For this hackathon, we partner with ARPA, ARPA, ALF, Spark, Union Foundation, Newman Cyber, CoCloud, Buildbox, Consensus, StarkNet, Web3.com Ventures, Ant Ventures, Infra, Aspecta, and Outlier Ventures. So the hackathon is called Hunt for X. We provide developers and entrepreneurs with an opportunity to showcase their ideas and receive mentorship from industry experts. We also hosted many different in-person meetups in during the hackathon. We hosted different ones in Hong Kong, Singapore, and Melbourne. And then so in the future we would love to host more events, more hackathons, to support the industry. So later on in September, we're also going to be one of the biggest sponsor for Ethereum Singapore in September. So if you guys are interested to join us in September in Singapore, then please let us know. We are available on different social medias, including Twitter and Telegram and Discord, of course. So if you can just ask anyone from our team in the office. Of course, one of our most important person, our partner from Scaling X, is Book. He's one of the speakers today. So yeah, feel free to reach out to him to get to know more about Scaling X. This is about us. We just started for 4 or 5 months, so we are very new. But then me and my co-founder, we have very long experience in the industry. For example, my other co-founder, Jaden, he has been in the industry for 10 years. He started when like nobody really paid attention to Bitcoin, and he bought a lot of Ethereum when the price was only 10, around 10, and now he's based in Singapore. And he incubated more than 50 different crypto projects. So he's definitely very experienced with incubation. And I personally, I'm also a partner at Hack VC. So Hack VC we manage 300 million, and we are based in New York and San Francisco, and we invested into some really big projects, including Compound, 1inch, UI, DYDX, and then yeah, some really big ones. And we're also LPs for Multicoin and Polychain and 1KX and Paradigm. So So welcome to talk to me if you're interested into HackVC as well. So here is a brief introduction. I'm very happy to give the the speak, and thank you for everyone. Thank you everyone for coming.
Thank you, Chichi. Please give a
Thank you.
round for Chichi. All right, now for this next phase, we'll be allowing the projects and collaborators to pitch with their projects. And so first up, it is actually Gemma, the founding contributor, but unfortunately, is Gemma here? She's here?
Yeah, I'm here.
Ah, yes. Hi, Gemma. Sorry, I didn't see your name there. Would you mind showing your face as well?
Yeah, sure. Let me just turn on my video.
No worries.
Okay. Can you guys see me? I'm actually not sure where I'm popping up.
Yes, you're
You guys
there,
see me?
actually. We can see you. Probably share your screen as well.
I can't really see myself. Okay, right. I think I can see myself. Good. Cool. So let me share my screen. And sorry, how long have I got, Jay?
You've
10 minutes,
got
right?
10 minutes, yes.
Sure. Trying to work out how I'm going to share the screen. This is it. Okay. Do you guys see? Do you guys see a deck? Do you guys see a deck, or what am I showing at the moment?
Yes, we can see the deck. Thank you.
Great. Let me just minimize this. Sorry, let me just put this into a new thing. Hang on, let me just stop sharing and then let me just do something else. Okay, I think better. Okay, so let me share again. Where is this? Okay, I think this is it. Let me check. Perfect. Do you see a deck now?
Yes.
Great. Cool. Okay. Cool. Okay. Thanks for having me, everyone. I'll do a quick intro of myself and now go into Portal Gate. And let me know if you can't hear me. I think my internet is a bit spotty today. So I've been my name is Gemma Xu. I'm actually currently in Sydney. I split my time between Sydney and Melbourne. I've been in the space for 6 years, since early 2017. Until I guess December last year, when I started at Portalgate, I've been an investor in this space. My partner and I, we invest across early stage projects via an entity called Fork Ventures. So very big fan of infrastructure and DeFi, and that's one of the reasons why I started. I became a founding contributor to Portalgate. So what Portalgate is really it's really a tech stack that focuses on compliant, privacy-centric DeFi solutions for institutional users, right? To transfer and trade assets on chain, whether it be across chain or within one chain, that encapsulates all that. So why are we doing this, right? Now, as having been in the space myself for 6 years, one of the issues I think everyone, for those who've been here for are quite familiar with, is everything on chain is public, right? So if you do any actions, if you trade, if you transfer assets, so therefore there's actually no decentralized, compliant, and private on-chain stack to obfuscate the links between wallets, right? And by that I mean to anonymize transfers and to facilitate dark pool trading. So what we're building is in fact two products. We're starting with the first one, right? So this set of solutions starting with a compliant anonymous pool, which then facilitates anonymous transfers, right, by breaking the link between wallets. So this particular solution, a very straightforward solution, it just goes in on one end and comes out on the other end, but your deposit and your withdrawal wallets are not linked. The second product, or the second solution, which we're about to commence building, is a decentralized dark pool, right? So what's a dark pool? I think many people who don't come from a traditional finance background may not be familiar with a dark pool. A dark pool is it's like an exchange that allows particularly large orders or institutions to trade with quite a few features, right? So meaning hidden prices, hidden swaps, hidden transfers, hidden balances, right? And hidden order matching, and as well as hidden order settlement. So that, if you go to on-chain, go to Explorer, all you see is that a swap has happened or a transfer has happened, but you don't know what the swap is, you don't know the price or the size, right? Only the parties that are engaged in that particular swap, they know those particular details after the settlement has happened. So it becomes quite a nice price discovery tool. It becomes a very nice, it's actually quite good for large size trading with very low slippage, because typically the swaps happen at midpoint or close to midpoint. So this is what we're building now. We're very focused on the first solution now. Hopefully going to mainnet sometime in July, subject to auditing, and then the dark pool. Probably targeting, I would say, early Q1 next year, right? The dark pool is a much bigger build. We're building ground up ourselves, and we have quite a strong team doing that. So what does compliant mean, right? So then this is where there's a lot of text, but the compliance side is we're leveraging a zero knowledge compliance oracle as a gated access to both the dark pool and the anonymous pool for transfers, where as a user you KYC off chain, right? Or KYC KYB off chain. You can think about it as a 0-1 or an attestation, right? The oracle receives this this message that says, okay, so this wallet is compliant without knowing who you are, and that oracle then attests to the wallet that the wallet is compliant, right? So at the same time, you've proven that the wallet is compliant without breaching anonymity on chain, right? Because your off-chain ID and your on-chain wallet is not linked. And once you've done that, then you can go to the what we call a teleport or enter the portal. Which becomes a pool where you deposit into the pool and then you withdraw from a new clean wallet, right? So that on Etherscan, all it comes up with is a deposit into a smart contract, and then when you withdraw from a new wallet, it's withdrawn from a smart contract, right? So your deposit in and out is not linked, right? It's broken by the smart contract. So from a product's perspective, it's really quite a straightforward product. It's the oracle and then this privacy solution. Now for the dark pool, it will be a similar setup. It will be the oracle, and then the dark pool will be the one in the back end, who's always a gated access. And the key here is that, our view is that, yes, we all want to be private. We all want to be anonymous, right, on chain. But we do live within a real civilized society with law and order, right? And one of that, and so therefore we have to be compliant to these real world regulatory requirements as well. From a product perspective, I won't do a demo. I think we actually have limited time, so I won't do a demo. But these are some sort of the screenshots from a product perspective. Literally, you get on the dashboard, you click on this little widget, you pop up and you go through this KYC process, right? And then afterwards, after you go through KYC process, your yellow widget becomes green, so it becomes a compliant. So now you've entered into this permissioned gateway or permissioned portal, after which you can then I won't go through. So this wrapping and unwrapping part is we're actually going to abstract away from the user interface. All this wrapping is a smart contract wrapping where it's a way to tell the backend solution that you're compliant, right? That the wallet can in fact deposit, because only a compliant wallet can do a KYC wrapping. But the key part is this sort of a backend solution where you deposit 1,000, 10,000 USDC or KYC USDC. You get a zero knowledge note, right? So the zero knowledge note proves that you or the holder owns the deposit, right? So whoever holds that note can then withdraw the deposit, 10,000 KYC USDC, from the pool using a new wallet. Right, and once you've withdrawn it with a new wallet, then you can go off and into this permissionless DeFi world and do your trading, do your LPing, whatever you're doing. I'll go through that. So this sort of covers what I was just discussing in terms of the backend solution. The use case really is it sort of provides the fundamental basis for a dark pool trading, right? Because this current solution, you can only go in and out, direct transfers. You can't do swaps, you can't do trading, you can't do anything, but you can do the very, very key transfer, right, in and out. And then on top of that, we'll build a dark pool, right? And this is where it'll be a spot-based dark pool first, but we'll also then go on to do perps, even lending, borrowing. Right? So over time, our goal, our vision is to actually build this hidden stack, right? Everything in DeFi is what we call lit, right? Whether as a user or as an MEV bot, you can see all actions on chain. Which is not very friendly if you want to try to do large size.
Gemma, you have about 1 minute left.
So in terms of, awesome. So in terms of these are the our socials. Feel free to check us out on our socials, particularly our Twitter, just Portalgate.me. In terms of where we're at from a commercial perspective, we've pretty much done with our seed raise. Apollo Crypto is leading it. We've got quite a very good set of institutions supporting us, angels as well. And we're just focused on building the product, getting it out hopefully in July, and then we'll commence our next raise, right? And I would say probably 80 to 90% of our investors are in fact our users. So that's also another validation from the market. Yeah, so I think I'll stop here. Any questions, feel free to ping me, or I know ping Jay or Shirag. Yeah, thank you.
Cool. Thank you. Give a round of applause for Gemma, right? Thank you so much. Probably next up would be Unidex by Kunal. Kunal is the founder of Unidex, and I'll give you the stage, my friend.
Yep.
Hello?
Just making sure I can be heard.
Yes, we can hear you.
I think I'm sharing my screen. Is it viewable?
Yes. We can see it.
Okay, sounds good. I would go full screen, but I think it's going to actually mess up a few things. So I'm just going to go to the slideshow itself, if that's okay. Okay. Yeah, so hello, everybody. My name is Kunal Amin, and I'm actually the founder of the Unidex project. And yeah, I think I'll just go ahead and get right into it. We have actually multiple different products and that the team here has built, and it's been a community effort as well. But I'll go ahead and go over them all and give you the breakdown about what we do. And the short way to describe what we do is we basically aggregate everything. And if you're not familiar with the word aggregation, it's essentially taking in multiple forms of data and presenting the user with that said data. And the way that we do that is we do this for swaps, we do this for perpetual trades, trading data, whatever it is. Our bottom line is to just make sure that you're getting the most accurate data and the most useful data. So let's go ahead and dive into that. Unidex is basically the liquidity endpoint for DeFi. And what we mean by this is there are many, many different liquidity pools across many, many different networks. Most notably, even recently released, on ZK chains as well. And, that presents a problem where sometimes the user just doesn't know if they're getting, good prices for their swaps, or, they don't know if they're being fed good information of like, if this is the most up-to-date price, or maybe the platform that they're trading on doesn't have, the best security standards, or there's a whole lot of different variables. And so when we call ourselves DeFi's liquidity endpoints, we make sure that if you're connected to our platform and you're trading on it, we're going to make sure that you get the best rates for swaps, best rate for your perpetual trades. We're going to make sure that you're going to get the most up-to-date trading data, the most fastest way to get that trading data, and a whole lot of other things. And we tackle a lot of different problems that I want to get into now. Essentially, the problem that we're seeing in the industry right now is that there's three different categories. I would say there's an issue with liquidity and how that's currently being, held. There's an issue with the networks. We see many, many new networks coming out every day. And then the platforms themselves, sometimes they're not too optimized, but let me give you a quick a quick bullet list of, the problems with each. When it comes to liquidity, it's too spread out, as I said before. You have Uniswap, which is essentially king in terms of liquidity. Then you have Curve, which is king in terms of, doing stable swaps. But then you also have some little pools that come up, like maybe new DEX launches that come up, throw out these token incentives and acquire this liquidity. And, if you're only trading on something like Uniswap, you might be missing the liquidity that may be presented on this new DEX. Not only that, but traders just aren't aware of these launches. It's a lot of data that you have to take in, and you have to be watching, Twitter constantly just to make sure that, you have that up-to-date information. And then even if you did have that up-to-date information, you face things like MEV and other hidden costs that you might not be aware of, such as, just incentives that another platform might be offering. And it's a struggle, really. It's quite the task just to even keep up with all the new things releasing in the space. And then on the topic of new things releasing, you have all these new networks, like for example, ZK Sync and ZK EVM. But those aren't the only two networks. There's 14 widely used chains, and Ethereum is by far the most used chain for sure. But networks like BSC, AVAX, Phantom, and all these other L2s like Arbitrum, Optimism, even some lesser one knowns like Boba Network. There's so many of them, and each one of those chains have different dexes and different aggregators that are on certain chains, and other aggregators that don't support other networks. And so you're also having to just account for all this, aggregators that aren't on one chain, but maybe might be on another chain. And that's another hassle itself. Some other platforms might even not have some basic features. Like for example, Uniswap doesn't have a built-in limit order function, whereas SushiSwap does. And maybe you'll go to a recently launched DEX that has limit orders, but it won't have stop loss orders. But let's say PancakeSwap on BSC does. We're missing all these features on all these different platforms. Traders are just unaware of where liquidity is. It's always a cat and mouse game to find out which one's having the new shiny new feature. And it's the question is, how do you solve that as an industry? And so that's where we enter in Unidex. And so Unidex is an exchange and a trading platform that's created to solve the issue of fragmented liquidity, missing trading tools, and being connected to all these different networks that, launch every month. The idea with Unidex is you come onto our platform, if it's for swaps or whatever it may be, you're always going to be guaranteed that you're going to get the best possible rates. It's going to be connected to the most amount of DEXs possible, and we're going to provide you the most amount of trading tools possible to execute those trades. But we don't do this just for swaps. As I mentioned, we do this for perpetual trading as well. So we're connected to about 21 different perp DEXs within the space, all cross-chain as well. We also do this for RPC infrastructure. So if you're wanting to connect to a node and get served the latest information to that node, or receive the fastest ping to that node, we got you covered there as well. And then of course trading data as well, things like charting and Oracle data and liquidity information as well. All these different things that are that traders are looking out for, or maybe they're not aware of these things. We aggregate all that data and we stream it to you, just so that you get the best possible rate and experience. And so one of our most used products is actually our meta aggregator. This is what we started with about 2.5 years ago. It's been a long way since then, and we've refined the model. But in a simple way to explain it is the trader goes ahead and executes a swap, let's say ETH to USDC. We'll go ahead and scan, let's say 1-inch pair swap, 0x's API, or even Uniswap directly. And of the found route that is the best possible rates, it'll fill between other DEXs, even from that aggregator. And this is why we call it a meta aggregator, because it's not just splitting between DEXs like Uniswap and SushiSwap, but it's also splitting between the aggregators that also aggregate. It's an aggregator of aggregators. And this is actually why we can claim that we give you the best possible rate, just because we're connected to the most amount of liquidity sources possible. And you never actually have to worry about opening multiple tabs just to check, am I getting a good rate? Ever since we've launched, we've done about 1 billion in volume. We're connected to about 170 different liquidity sources across all these different networks. We've partnered up with so many different protocols to make this happen, about 78 and counting. And we're on almost every network that you can possibly imagine, 21 to date, accessible through our API, which is also open source. And that's basically, what we do here. Our concern is to make sure that if you're coming onto the platform, you're going to get the best rate. And actually do a little short demo. I'm not sure if this is also still streaming it, but this is our swap platform, and you can see we kept it pretty simple. Right now I'm on Optimism. So if I were to go ahead and quote, let's say 100 DAI to USDC, you could see exactly how this trade is going to be broken up and which source it's going to go through. So for example, right here, it's going to actually route through 1-inch if I were to do this trade, but you can see exactly how many different sources were queried through this this short trade here. We got 0x, Kyber, Firebird, and OpenOcean. And this is also what I mean by traders aren't aware of these opportunities, because let's say you're a die-hard OpenOcean fan and you're doing this trade, you wouldn't know that, this stable swap has actually a 1.6% difference, or 0.16% difference from 1-inch. And, nobody has time to open up all these different tabs, just, check if I'm getting the best rate. And maybe that's not a large amount right away, but, like all hidden costs, they do add up by the end of the year. And if you're, a trading firm and you're doing large swaps, almost, hourly, that cost really does add up. And, different liquidity sources are constantly being popped up. Different liquidity sources are being removed from these aggregators. And that's why when you come onto our platform, you can be guaranteed that you're going to get that best rate on the market. And so, yeah, that's basically an overview of Unidex. If you want to come check us out, you can go visit our social channels at Unidex Finance, or you can go to our website, unidex.exchange. And I hope you guys try out the platform, and thank you for your time.
Thank you so much. Give a round of applause for Kunal. Thank you, Kunal. We'll also have an AMA session after this round. And if you do have any questions, please hold on to it, and we'll get to you. If you have any questions for Kunal or Gemma from Whirlgate, we'll get to you shortly. So the next person that will be presenting is Quenta from Bird Rock. Sorry, Bird Rock from Quenta, the other way around.
Yeah, hi, how you doing?
How you
Let
doing,
me,
Bert? Probably,
Yep.
Kunal, could you unshare your screen?
Uh, oh, it's at the top. There you go.
Cool, thank you. I'll leave the stage to you, Bert. Thanks for
All
coming
right.
on, both of you. What time is it there now?
For me, it is 1:35 a.m. Out here in California.
Yes,
So-
and Kunal was you were from Texas, right, Kunal?
Houston, Texas. Yep.
Houston, Texas. So thank you again. So please, Bird Rock, we leave the stage to you.
All right. Let me get my screen sharing ready here. Looks like I may need to briefly allow the computer to show my screen here. So all right, I'll give a little
Daddy, I'm coming.
I'll give a little bit of a background on myself here. Well, my screen restarts. So my name is Bert. I am technically the marketing DAO PM at Quenta, so I'm focused on marketing, but in practice, I've also been focused on kind of the product side of things because I'm a very active trader. I've been, before I came onto Quenta, I was trading full-time as my main job. I had a little kind of side gig just to have a W-2 coming in, but was really making my money from trading. So when Quenta brought me in, I was just really passionate about derivatives, and was just kind of excited to be in the space. So in practice, I've been kind of one of the go-to guys for the devs to kind of give feedback on the product, try out other products, and kind of tell them what types of things I think should be included. And so Quenta is a decentralized perps exchange. We focus on the decentralization aspect. So, this is all Oracle-based perps, like some other systems. And we leverage synthetics for our liquidity. And one of the reasons that we leverage synthetics is something that I'll be able to show you briefly. Actually, I may not be able to show you exactly what I had in mind because my browser had to restart here. But let's see if I can still get up some of this. Let's see. Is my screen coming through at all?
No, it's not. It's just your video is on at the moment. That's pretty much it.
All right. I will give it one more try here. I guess let's see. If I can't share the screen, I will just do this kind of the old-fashioned way and explain everything. Which I actually, don't mind. It's all right. It's not going to let me share the screen. So I apologize for that. But I'll just kind of go through the big problems that I think Quenta is solving. So to kind of break down exactly why we built Quenta, I'm going to have to start at synthetics because synthetics and Quenta were originally the same product. Quenta was the front end for synthetics swaps back when synthetics was just a spot synthetic asset exchange. So the original idea was you had this central pool of liquidity that was able to mint synthetic assets that were pegged to either a stablecoin, SUSD, synthetic gold, synthetic silver, synthetic Ethereum, and things like this. Now, the original exchange didn't see a ton of use, and it's probably fairly obvious why if you've used a lot of DeFi products, because it's not very attractive for traders or great for hedging or other use cases to trade these kind of spot-based synths. It's not capital efficient. So although it was a great proof of concept, it didn't really take off at first. So the product that came out of this was Synthetics Perps. And like some...
Daddy, Daddy, I'm coming.
Bunda, oh, Bunda Rahma,
Victor, Victor.
Aduh kakangku.
oh my God, I'm about to die.
Apologize for this. Could Leo and Chirag ensure that the room is verified on the Zoom meeting? Make sure if there is any external recipient that come in, could you boot them out just in case to prevent any disturbances to our guests' presentations. Apologies for that in the community. That was an interesting show. It's unfortunate, but it is what it is. It happens sometimes. Security is very important. That's the reason why we have ZK rollups, and hopefully that won't happen again. Make sure that does not happen. Is Bert still with us?
I am still with you.
Sorry, apologies on that, Bert. You still have the stage.
All right. If you could, can you let me start my video again? I'm happy to step back up here. All right.
Ooh.
Okay, I am back. Well, a little bit of entertainment for us there. Thank you to whoever came in and provided that. So the big problem that a lot of perps protocols have, if you look at fully on-chain perps, is that it's very, very hard to bootstrap liquidity. And so this was the reason that we leverage synthetics. And also one of the big problems synthetics is solving is that it's very difficult to get deep liquidity and then also manage your risk. Now, one of the images that I unfortunately am unable to share is actually a comparison between one of the other major perps exchanges and Synthetics Perps, showing the aggregate open interest. So what this would show you is that if you looked at GLP, which is the liquidity pool for GMX, and you looked at the exposure that GLP has, most traders are going to be long rather than short. And the risk of having most traders be long is, of course, that your traders are going to make money against the liquidity providers as the price goes up. And it's almost never 50-50 with that type of model, because there's no incentive to actually balance longs and shorts. So your LPs are always going to be exposed to the market in some way. So what Synthetics has developed is a system where we actually use two different mechanisms to balance the skew. Skew being, of course, the ratio between longs and shorts on the market. One of them is a funding rate market. Now, this is kind of a cleverly designed funding rate system whereby the funding rate isn't actually directly impacted itself by the market skew. What's impacted by the market skew is the funding rate velocity. So this means that if traders are mostly long, the funding rate will be increasing. If traders are mostly short, the funding rate will be decreasing. And what this allows the system to do is find a fair rate for funding, because rarely is the fair rate for funding going to be going to be zero, right? It's going to be, in some cases, if everybody wants to be bullish, the fair rate for funding would probably be positive. If everybody wants to short in order to hedge a bag, some other assets have high inflation rates, a lot of locked tokens, people might want to hedge this type of thing. So there's going to probably be more demand on the short side. And so by finding this perfect funding rate where longs and shorts are equally incentivized, to take up open interest, you can actually get to where you have equal longs and shorts on either side of the trade, meaning your LPs are not exposed to the market. And this allows you to scale the liquidity without actually scaling the underlying collateral, which is, a very important thing if you intend to take liquidity from, 7 figures of open interest, which most of the major perps exchanges, if you go on at any one time, there's about, 3 million of open interest available on Ethereum. And this is a limitation partially because you can't let people push the skew in one direction or another. So right now, Quenta has about 40 million long and 40 million short available to trade at any one time. So it's quite high liquidity, probably the deepest liquidity of any similar style AMM. Now, that's kind of the problem solved by synthetics. So where does Quenta come into this? Well, since synthetics is focused on the back end, allowing anybody really to plug into the perps contracts, there are a lot of different things that traders might want from a front end that isn't really the focus of the synthetics product. Some of that would be kind of deposit management. So each one of these market contracts in synthetics is isolated. You have to deposit and withdraw from each one of them if you want to trade. And we make that easier for users by developing our own contracts on top that allow you to kind of in one transaction, withdraw and deposit from contract, set stop and limit orders, so set multiple order types with their own triggers. And in the future, you can really plug just about any function into these contracts. So you could even do something like we've talked about possibly collateralizing options with perps, or allowing users to earn yield on their idle deposits. So there's a whole lot of things that you can do that really benefit a trader that aren't really part of the core product of synthetics. And in addition to that, we take over kind of the design of the front end, a lot of the data that traders are going to want, and of course the marketing aspect of it. So this provides a lot of value to synthetics. They can just focus on the underlying contracts, and we can really look at how the trading experience is going to be improved. And what we've seen so far is it's been a very popular product. I want to say it was in February, in late February, that we really fully launched. And this means, increased our open interest so that we actually had enough so that people could take large trades and really start using the product. And since then, we've done about 7.5 billion in notional volume. And we've seen pretty consistently high volume since then. And right now we're seeing quite a bit of excitement with Quenta in particular, because we're able to, we have a fairly large grant from Optimism that we're able to pass down to users to kind of incentivize them to come and try out the product. So we're giving away a lot of OP rewards. People are really liking that. And what we see, which is great, is a lot of our users that come in and try the product, they end up returning. And part of this is because we have some of the lowest fees. So our fees are also another way that the skew is incentivized. And the 2 basis point fee, we call a maker fee. It's technically not a maker because there's no order book, right? It's just kind of the terminology that we've used because there's no existing terminology for this kind of thing in AMMs. So we've adopted this order book terminology. But what this really means is that if you're trading...
You have 1 more minute.
Okay, great. What this really means is that if you're trading against the skew, if you're helping balance the skew, you get a lower fee. So it's only 2 basis points, and then 6 basis points if you're trading with the skew. And this creates a little bit of an extra incentive for people to balance it. It makes these kind of arbitrage trades easier. So it takes the risk off the LPs. So a lot of other perps products in DeFi, you're going to be paying something like 10 basis points. So we've been able to offer really competitive fees. And I've seen, we had a very high volume day where we did almost 500 million in volume in one day. And when I looked at the people who were trading that day, we found that about 20% of our historical traders traded just that day alone. So people are really coming back to use the product, and it's been really really amazing to watch this thing grow. So yeah, if just to kind of wrap it up, if you want to find out more about Quenta, you can go actually check out the product at quenta.io. Feel free to poke around. We have presence on Twitter, so you can follow us on Twitter at Quenta_IO. You can also find that if you scroll to the bottom of the Quenta.io landing page. And then I live 29 hours a day in Discord, and I'm there to answer any of your questions. Particularly, a lot of people want to know about this funding rate arbitrage mechanism. It's a little bit complicated, but it is quite an interesting mechanism to get behind. So have some written material on that. Feel free to tag me, drop into Discord, or whatever you'd like to do if you want me to share some of that information. So
Cool.
yeah, thanks for having me today. Apologies for not being able to share my screen. I'm not sure why I couldn't get that one to work, but yeah. Hope you guys enjoyed my rundown here.
Thank you. Give a hand for Bert, everybody. So up next, it'll be Orbits. Anna from Orbits. While we wait, how's everybody going today? All good? So again, welcome to our event. This is actually an event that we do with Scaling X, as I mentioned, as we wait for Anna to come in on board. And if you have any questions, probably we would want to raise it now. Do you have any questions for Gemma, for Orugate, Bert Rock at Quenta, and Kunal, in Unidix? No?
So a question for Gemma.
Go for it. Gemma, you have a question.
Yeah, so
Cool.
why would someone use it's just a question on regulations. If you consider that kind of like being anonymous on the chain, has there been people raising that in terms of government regulations and all that? Yeah, it's just a small little things. I don't know whether if you know if there's any dangers in that area.
So I'm sorry, it was a bit soft. So is your question about
regulations
around sort of, being anonymous on chain, right? Okay.
Yeah, why would someone not use things like Tornado Cash over your app?
Yeah,
because
exactly. Yeah, so well, firstly, right, Tornado Cash was banned not because there's something wrong with the protocol. In fact, the protocol works so well that the issue was with the user, right, or the user base, right? There was a large volume that was dirty money, or sanctioned countries that went through Tornado Cash, and that's why the smart contract addresses of Tornado Cash was sanctioned as well. So really, as if I was a user and I'm a legitimate user, I trade on chain, but I simply don't want my trades to be leaked to the public, right? To be, in real time, to people to see what I'm doing. And also I want some basic privacy on chain with all the various wallets I have. It's just like when you go for a broker, you can do trades, but you don't expect your trades to be public, to everyone, right? So that's that level. That's the sort of the mindset and the use case. But at the same time, I don't want to be tainted. I don't want my wallet to be tainted by, say, going to a permissionless solution like Tornado Cash, where I don't know who else is in there, right? If there are other people who is doing nefarious activities in the same pool as I'm in, then I'm going to be tainted, and my wallet will be tainted. Both my withdrawal wallet will be tainted, and as a result, I can't use that wallet elsewhere, right? So that's, as a result, you end up having a lot of self censorship by legitimate users away from these permissionless protocols, right? And then, you know, and in particular for us, we're targeting institutional or like crypto funds, institutional users who their mandate actually requires them to know, in theory, every single pool that they go in, to know their counterparties and to be sure that that counterparties are clean. Now, that is currently impossible because most DeFi is permissionless. So if they go into a Uniswap, right, they actually run the risk of having tainted counterparties in that pool. So it's a bit great, right? But therefore, having this permissioned KYC solution is actually perfect for them, right? They used to do KYC on like in the centralized exchanges anyway. They have no issues KYCing, but at the same time, you know, we allow them to be KYC'd off chain, but also have that anonymity on chain. Okay, so then you know, I guess an extension of a question is, if I'm anonymous on chain and I tell my and I know I've KYC'd off chain, regulators come to me and say, actually, you know, I want to know, or come to a provider, a solution, right? I want to know the, you know, I suspect, right? Regulators say, I suspect wallets 1, 2, 3 have engaged in nefarious activities, and I want to know who their ID is, right? So that is why, in order to accommodate for that, we've built effectively what we call a de-anonymization process, where it's a multi-sig, that only the regulators have the private keys to trigger the multi-sig, and then the regulators can then link up the wallets to the IDs, right? And the view there is that as a user, you don't because you're legitimate, right? You simply want to be anonymous to the public, but to the regulators, you're fine to be, you know, to be doxxed if needed, then that's fine, right? So that's sort of that's I guess the mindset and the use case that we are building for.
Okay, thank you, Gemma, for that answer. I hope that answers your question, Brendan. For now, we're still waiting on Orbit, so we'll just skip them for now and head to Newman with Joanna. Joanna, you here?
Yes, actually, our Simon will do this presentation. I will, transfer this for Simon.
Cool.
I'm here.
Hi, Simon. Welcome. You have the stage.
Okay, I will share my screen. Can anyone see the screen?
Yes, we can.
Okay. I will begin. Hello, everyone. Thanks ScalingX to invite me to share some views on ZKP security. My name is Simon. I'm a Web3 security researcher from Newman Cyber. Our team did deep research on ZKP security recently, and I will share some points from our team's researches. This is the main content of today's topic. First, we will discuss the three main features of ZKP, which is the basic consideration point for ZKP security. And then I will list the security concerning points for ZKP projects. At last, I will show you some solutions for ZKP security by our team. Okay, when analyzing the security of system, it's essential to firstly check its features to ensure that all security service meet the requirements of the features. So when it comes to the ZKP system, it must fulfill the three feature pillars, that is completeness, soundness, and zero knowledge properties. Completeness means the prover should be able to prove the correctness of a true statement to the verifier successfully. If a proof system lacks completeness, it may fail to to provide correct proof under extreme conditions, resulting in like DOS state. Soundness means malicious provers cannot deceive verifiers with the false statements. If a proof system lacks soundness, attackers can forge proofs or create special proof structures to deceive verifier, leading to severe permission bypass issues. And the last, zero knowledge means the verifier should not gain any information about the data from the prover during the verification process. If a zero knowledge proof system fails to satisfy the zero knowledge, it may leak original parameters during the interaction process, and it will enable attackers to construct some attack proofs based on the leaked data or cause malicious behavior by the verifier. But based on the above three features and typical blockchain vulnerabilities, our team will pay more attention to these 8 points in our security service for the KP's project. The left is the typical blockchain vulnerabilities such as code quality, economic incentives, performance optimizations, for tolerance and recover mechanism. And we pay more attention to the right 4 issues. And today I will explain the 3 of them. That is proof circuit, verify contract, and privacy protection and data availability. The security issues on circuit includes circuit design, cryptographic primitive, the implementation of cryptographic primitives, and the randomness. By carefully considering each of these factors, project teams can help to mitigate potential vulnerabilities and ensure the overall robustness of their ZKP system. Currently, detecting errors in ZKP circuit design is a challenge task because the lack of reliable tools available. This error can lead to the logic error during the design process. For example, during the 2018 Zcash stapling upgrade, the circuit design flaw was identified that could have allowed the unlimited counterfeit of the EC token. Although this
you have 1 minute left.
Okay, just 1 minute.
Yes.
Okay. The correctness and the security of the ZKP circuit relies heavily on the property implementation of cryptographic parameters, including hash functions and encryption algorithms. And the randomness value is also cause the very critical issues in the ZKP parameters generation. This is the contract vulnerabilities in Semaphore. In 2019, POMA found this, and the verified contract have a vulnerability can pass some wrong hash code, wrong hash to lead to the double spend. And this data available if some Merkle tree or some user's data was stored in the one server of the chain. It may cause the unavailable of data, and the user cannot withdraw their access to the mainnet like ETH. Okay. So how can Newman Cyber help secure your DKB project? Newman Cyber was opened in Singapore and in the 2021. In the past, the company has developed rapidly and passed many industrial certifications such as CIST. We focus on on-chain security and provide security service and product for any Web3 project. Specifically for the ZKP project, we can provide 4 types of security service, such as circuit audit, contract audit, challenge test, and FAS. We have extensive experience in auditing smart contract codes and is also proficient in auditing circuit coding logic to ensure the accuracy of conditions and witness generation through both manual and automatic methods. In addition to the security service, Newman have developed a security product that can provide real-time protection for projects after they go online. That is EmuX. EmuX is a state-of-art Web3-based security monitoring and protection system that is designed to sense security situation, issue risk alerts, and track on-chain activities. Based on the transactions auto analysis ability, EmuX can provide front-running bot and smart contract firewall to block attack transaction on time. We also open the both developer market for our security community, which can enhance our detection ability. EmuX has already collaborated with Binance to improve risk awareness and protection for BNB chain. Okay, that's all my sharing. If you are interested in our service and products, please contact us. Thanks all.
All right, thank you so much. Give a round of applause for Newman and Simon.
Yeah.
Okay, great.
Great.
At this point of the event, we open any questions, be it for Unidix, for Portalgate, for Quenta, or even for Newman from the audience, and we'll also try and get the online questions from any community members with regards to the YouTube chat or maybe Discord channels. And after this Q&A session, we'll actually have some snacks. We'll have a 30 to 35 minute break, and so that everyone can network together and meet everyone and get introduced. So prior to that, do we have any questions here? Yes, Nissan, how are you doing, Nissan? Here you go.
Hi, question for Jamal. With regards to Portalgate, like there are some changes that come into how wallets are created with account abstraction taking place with very small contract wallets and emerging. How would your product like compete with these? Because instead of having to obfuscate my token with other tokens and put in a pool, the small contract wallet provider can actually give me that and give me compliance in the territory I need. So how would you approach that problem?
Sorry, I think there's something wrong with the audio. I didn't actually quite understand that question. Maybe Jay, could you repeat? Hello.
Sorry, what did you say?
Okay,
Probably
so
say it again.
there's a new, there's this ERC 4337, which lets you do account abstraction, which enables smart contract wallets in a way that is on-chain and a little bit cheaper. So we always had Argent and Gnosis Safe and all these other smart contract wallets. But now we actually have a concept where we have these paymaster options that can help with the obfuscation of the identity of the wallet, which still keep it compliant because you are trusting the provider of that smart contract wallet to give you that compliance rails that you can get on-chain in the same way. So how is like Portalgate going to approach that problem? Like instead of having to depend on multiple users being in a pool to obfuscate me, that I trust my smart contract provider who will give me the correct regulatory protection in terms of giving data across if it needs to, but also keep that obfuscation by bringing that stuff off chain, because that's in essence what's happening. They will do it off chain instead of doing it on chain, and I don't have to worry about the liquidity pool to obfuscate.
I'll have to look into that. I haven't looked into the details of this is 4337, right? I know it's quite a popular ERC lately. I guess the first consideration there would be, how do you know, like, what do you mean by compliance, right? Who's to say are you doing KYC? As far as I know, 4337 is it's a permissionless contract, right? So how does that compliance work? And then secondly, sorry.
It allows a smart contract wallet to exist. So I can just delegate. So let's say you are Portalgate and you have a web wallet. So I can allow you to, like, if you had a web wallet to hold my funds because you have it in a smart contract wallet. So you still don't have access to my funds, for whatever abstractions you have around it. You are giving me the guarantee of compliance, as opposed to I have to get my own guarantee of compliance through a wrap token. So it's a little bit more, like, it's a different approach. There's nothing wrong with either approach, but like it's a competitive approach. So that's why I was like, have you considered that? And like, how would you look at that? Because the concept with Portalgate is that multiple people are putting deposits of the same amount in a pool, and that's what obfuscates someone looking at on-chain transactions from seeing that I am pulling out money from this account. Even though I have a note, if it's only one person with the pool, if I deposit and pull out too fast, then it's easy to trace them together. So that's one reason why Tornado Cash is so popular. Like, everybody goes there. So like with a small contract address, because you have this concept of paymaster, which is controlling the payment of gas, you can actually embed in a smart contract for the wallet and obfuscation protocol to basically hide who's the originator of that, because the smart contract address isn't tied to an identity in a traditional sense. It's tied to an off-chain identity. So that was just my feedback there, like just to consider that and the approach.
Yeah, no, I think that these are good comments. I need to look into 4337. Yeah. But I think the key thing there is really like, what is compliance, right? Like, so for us, compliance meaning being regulatory compliant. Like we're compliant enough for like a traditional bank, a TradFi bank to use, right? Whereas what you're suggesting with 4337, like someone else is effectively guaranteeing your that you are who you say you are, and you are and another bad actor in from a regular.
All right, I think Gemma's connection has timed out, it seems. We'll probably move on to the next question. Does anyone have any questions? Oh, Andrew.
I have one short question for index. So I check the website and I can see I cannot see the option. So do you have any plan for option? And if yes, what's the timeline? And if no, what's the reason? Yeah, that's my question.
Yeah, so we had basically a timeline and slash roadmap of things that we wanted to cover. We started with swaps just because the market was really built out for swaps about 2 years ago. And then we naturally progressed to perpetuals, and that's something that we're revamping and re-releasing now, once again. And for options, one of the concerns was even if we did do aggregation and allowing you to place trades on, let's say, Lyra or Premia or, recently launched Aveo, all these different platforms, it's still a concern whether or not the liquidity is deep enough. And we've talked to a few different market makers, and there seems to be a general consensus that even if the tools were there, even if the UI was perfect, it doesn't seem like the actual market making ability and the current protocols that are out there would be sufficient enough to get favorable fills, even through an aggregator. So we're currently holding off options, but we still do want to provide it. And we would say that this would probably come sometime near the end of the year, just because we're more focused on our existing products, then releasing a mobile app, then releasing some fancy extensions that can help you across any site. And then we also have our own app chain that we're building with Optimism on the OP stack. So there's a few things that are already along the way, and then we'll tackle options. And hopefully by then we'll see that the options market is a lot more built out, and there's a lot more liquidity, more good protocols that are out there, such as Premia V3 or the options protocol built by Ribbon Finance. So we're really waiting on that. But even if those solutions don't come, we will still tackle it by the end of the year.
Cool. Thank you so much. Any other questions that like to come up? I'll probably ask something to Bert from Quenta. So, Bert, are you still there?
Yeah, I'm still here.
Yeah, so out of curiosity, what is Quenta doing right now as it stands? Do you have any updates that you'd like to tell us?
Yeah, I appreciate the question, because we're well, in addition to making constant improvements on our existing perps product, we've begun looking into building our own perps liquidity. Not necessarily to move away from synthetics, because it's a very powerful partnership. We have fee sharing with them live now, so it's really a great way to move forward with kind of the deep liquidity on these major pairs. But one of the things we've been looking into is something called TWAP perps, and so basically what this is something that uses the Uniswap oracle. So essentially, you can build perpetuals using any pair that exists as a Uniswap pool. And the way we protect against front running is by actually getting either a TWAP price or the current market rate, and then giving users kind of the what would be kind of the most favorable for us of those options. Now, of course, the concern here is with pairs that have very low liquidity, you need to set the TWAP window very high, which means that there could be, like during times of market volatility, there could be a very, very wide spread. But as you look into more liquid pairs, you can get that TWAP window really low. So you're talking about relatively tight spreads. And this allows us to just kind of plug into pairs that you might not be able to find just by going through Chainlink and Pyth oracles, which is what Synthetics uses. So one of the pairs we've been trying to get live is an ETH BTC pair. Now, this has proven kind of challenging because we're reliant on these oracle providers in order to offer pairs like this through Synthetics, but it becomes kind of trivial to get like an ETH WBTC oracle from Uniswap, and then the liquidity should be sufficiently deep that we can make the TWAP window very short. and offer trading on the ETH BTC pair, or really, just about any pair that has sufficiently deep liquidity that the product is usable and attractive. That's on Uniswap. So it really kind of widens what we can offer. And of course, as you start building out these pairs, you can kind of build structured products and do all kinds of interesting things using this as a base. So it's something that right now is in the kind of ideation phase. It's being kind of specced out, and the beginnings of the code are being written. So we expect that to be kind of on testnet probably sometime in Q2 of this year. And yeah, it's going to be hopefully a very exciting way to just expand the product offerings. While still keeping with our core product offering, that's really just offering the lowest fees and the deepest liquidity on kind of the major pairs that people like to trade.
Thank you, Bert. Probably at this point in time, I'd like to wrap this up and also provide the opportunity for everyone to refresh for the event. So thank you for all of the speakers and guest speakers that are online, and we shall see you in probably 35, 40 minutes. Thank you, everyone. If you're hungry or any beverages you require, please head to the kitchen. And this is your opportunity to network with everyone that's attending. Thank you. Thank you.
Yeah, yeah. I'm developer. So it's really fine. It's thinking about how did you make this page well?因为这一次呢，就是说邀请大家预设中，因为加上我是他们的电子 All these FTX, all these crazy collabs, like just negative. I thought, technology layer 2, unrealistic goal. And that's what I was breaking I used to go all in and now I'm
Yes.
So one that so that's black by or spots. So when they plan to do this, it's perfect. And with that, so I know all that. It's still longer to talk. Really, yeah. That's what but they might be smart, they want to. Yeah. Yes. It's actually it's a major device. All right, guys, thank you so much for everyone. I hope you had good refreshments and everything. And finally, this part of the event will actually get the Q&A session for Scaling X's ZK Hackathon. So if everyone could please take your seats again, and we'll quickly get through this final event. Then after that, we'll finally have the final networking event post the Q&A session. Just confirming with everyone, Bert is here, Krunal is here, and Bob Jiang is here. Let's confirm everyone else. Oh, okay, no worries. So it's really quick. All right, there's 5 questions in this, and this is the final thing. Especially, we would want to know the panel whether or not they have some opinions regarding ZK rollup. And Sibo, you're also involved in this. Yes. So hello, please introduce yourself. Actually,
my name.
Everyone knows Sibo.
Everyone
knows.
A popular guy. All right. Anyway, I've been involved in the ZK space for a while, especially in the Stackware ecosystems. I like doing lots of StackNet, Cairo stuff. Also, I was doing some AutoGate development work as well. So happy to see you guys. I know you guys like stay back really late, like show the true level of the crypto, and we all know that's the future. So let's
Going up.
Yeah. Let's do that.
All right. Probably we'll start off with a question. In light of recent news about the security breach on ZK Sync-based Dex Merlin, if you haven't known already, ZK Sync Dex Merlin was essentially rugged, which lost $1.8 million despite being audited by, I believe it was CertIC. So interestingly enough, How do you think zero knowledge proof can enhance security on layer 2 of DeFi protocols? And what is your view on this particular case? For this particular question, I leave it up to the board. Sibuk, do you have anything to say? Yeah, okay.
I can take it.
It's all right. I'll probably raise it to Kunal first if you have any opinion about that question.
I don't think I have any particular immediate like thoughts. Maybe I can answer the second part a little bit more, where it asks what's the view on the particular case, and it's quite interesting because when it comes to the exploit itself, this one was more so that it was backdoored by developers that the team thought was trustworthy, or at least that's how the story goes. But it's interesting how a lot of these exploits that we see day to day are either inside jobs or they're very simple errors that that could be caught but doesn't seem to be caught. So I don't think that ZK proofs or the technology itself can really enhance the security in this particular case, because again, it was a rogue dev as the story goes. But even then, I don't think I can see any immediate ways that the technology that's being discussed today can really improve the security standards when it comes to audits and things like that, or clean code. But it's definitely an interesting case in the fact that we see so many of these being fairly simple things, and it's hard to catch whenever they first come out, and it's always catastrophic. It's very paints a bad light on DeFi. But that's just my initial thoughts.
Thank you, Kunal. Bert, do you have any opinions on that?
Yeah, so this particular case, I'm not too familiar with, and exactly how the technology can kind of help prevent these type of exploits. I also don't really have a great answer on, but what I can tell you is that it's a huge concern for Quenta in particular as we start attracting liquidity to our own contracts. How reliable these audits are and what kind of solutions there might be. So, I know there are definitely some auditing firms that are a little bit, more well regarded than others. I think one of the things that you can do is really just look into the history of your auditing firm and make sure that you're working with somebody that has a good track record. Some of the other things I've seen come up are this idea of auditing contests where in the end you're spending a little more money, but you're kind of opening up the process of auditing to white hats right away. And then of course the very interesting one is maybe employing some kind of AI, which I know people have been trying to do. We actually did drop the Quenta contracts into ChatGPT just to see if it could find any errors, and it did not. So that's good news. I think it's probably going to be a little bit of a cat and mouse game though, moving forward. You're going to have to utilize kind of all these different avenues, and you're going to have to, really at the end of the day, just be aware that anytime you're using a brand new contract, it's going to be a little bit of a risk. So really battle testing and having contracts that have been around and been used and been forked multiple times is going to be the best way to make sure that your contracts are secure. And yeah, unfortunately, I think the very open nature of Ethereum, where you can kind of write anything in Solidity, is going to make this a little bit of a challenge moving forward. But as these protocols get a little more ingrained, yeah, the contracts are going to be a little more battle tested. You'll see people forking things that people have used a lot. Hopefully the situation gets a little better over time.
Cool. Sibo?
Yeah, I just want to add to that. I think the Merlin index is an insider job.
Oh.
Yeah, that's what's the report from CERDIC anyway. CERDIC did the final report. It's insider job. Obviously, this is happening very often in the crypto space. If you guys remember, Axie Infinity, they have a warning to got exploited like 600 million, right? That's kind of crazy, but it's kind of a multi-sig, obviously exploited with a multi-signature. So yeah, so like I think this bird, right? That have to be very cautious, especially those new protocols. There's a risk and reward factor. Obviously, these days, meme coin is crazy. Yeah, Pepe and today's ladies, 150x in one day. Obviously, bearing a lot of risk as well. If you want to deploy large amounts of your capital, make sure you always deploy to those battle tested, and also in the market for a long time, like units for V3 or V2, and curve is kind of DeFi protocols. That's my suggestion.
Cool, thank you. So probably we'll move to the next question. ZK is currently being used in many projects to enhance privacy and protect data security. So an example, obviously, right now we have Portalgate with Gemma and Sibo. And is this the primary application of zero knowledge proof, or can you share some insights on how a more privacy-friendly world could look in the future? Probably I'll give it to Sibo first.
Sure. So in the ZK world, there are lots of kind of user cases, right? One is like those layer twos, like ZK Sync, Stacknet, and Scroll, and Polygon Hermes, Polygon ZK layer 2. They are trying to scale in Ethereum, right? Using the ZK knowledge to scale Ethereum. Obviously, another thing is the privacy, right? ZK is kind of a born to really fit to the privacy world. And there's another thing like ZK DID. There are lots of utilities of business cases for the ZK. So what's your question again?
So the question is, can you share some insights on how a more privacy-friendly world could look like in the future in terms of the primary application of zero proof?
Privacy-friendly world in the future.
Yeah.
So I think everyone wants to have kind of privacy, right? You don't want to expose your on-chain activities to everyone, and everyone just monitor your wallet day in, day out. So definitely there's demand out there, right? But still there's a regulatory kind of alertness, which I mean like using Tornado Cash as an example, right? The guy who developed Tornado Cash as a developer, he just trying to build some privacy mixer, but got in prison like for several months, right? He finally got bailed out, but still, it's a tragedy. He's just building a platform using the technology. So that's why I think all those layer twos are currently focusing on their scaling solutions. Obviously, privacy, there are a bunch of other teams working on that, like Aztec. They're building a privacy layer two. And yeah, there are so many people building this. So I think there's a natural demand this world. Everyone want to have their privacy. But still, you have to be very careful. Like, for example, like Portalgate, we're embracing the ZK knowledge to have KYC, ZK proof enable the KYC wallet. So which means the wallet is KYC, but there's a ZK thing, ZK factor. You don't know the wallet can link back to whoever the KYC, like passport or the stuff, the details. But you know this wallet is KYC. But for the details, it's kind of in privacy. And you can then once your wallet is KYC, then you can do other like mixer of stuff, obfuscate your transactions. I think there's a natural market fit.
Thank you, Sibo. Kunal, Bert, do you have anything on your mind in terms of the question at hand?
Yeah, I have a maybe an interesting thought that I think that the question was, would it enhance privacy and protect data security, and would these be the primary applications of zero knowledge proof technology? But I think I would agree on one of those cases being just data security. and not so much privacy. Just because it's an interesting thought that, you know, in terms of governments and the way that data is, governments want data to be transparent, but government themselves don't want their use of their data to be transparent. So it's an interesting balance of the way that governments are trying to regulate the space. And even Snowden has made a few different talks about this, specifically recently at Consensus, for example. It's like a cat and mouse game in terms of the privacy aspect and enhancing privacy. I definitely think the best use case and the most adopted use case would probably be protecting your data, the sensitive data that you don't want places like Google or Apple to collect. And a lot of people are seeing the value of that slowly, opting out of data collection and even taking steps to preserve their data not to be collected. And I think a lot more solutions will end up popping up so that zero knowledge proofs are being used in this. But it's a weird tug and pull between the privacy aspect, because you don't want your government having its operations be entirely private. You want it so that your citizens can verify what's happening within your local government or your state government, whatever it may be. But then your government doesn't want you to have that absolute privacy. And so I think that it's still going to be a while before privacy layers like Aztec and things of that sort get adopted, just because there's going to be so much push against it that I think that it would be very hard to get that adoption. And as much as people say that, it may be decentralized, governments are very powerful in making it so that these things can't be adopted. For example, if there was an outright ban for crypto in the US, it doesn't really matter if you were to use a VPN or anything like that. It's gonna be such a nuisance for you to even, transact and utilize the technology that most people will give up, as we've seen with Tornado Cash, for example. So I definitely think one of those is an easier answer, being data security. But I think we're still a very long way from enhancing your own privacy in terms of utilizing things like Aztec L2 to censor your transactions or shield your transactions, not censor your transactions, shield your transactions from outside view, just because governments are going to want that data. But yeah.
Okay, cool. Thank you. Bert, do you have anything to say?
Yeah. So one of the things that came to mind is originally when I had planned out this presentation, one of the things I was going to do was actually connect to Quenta using RainbowKit with a read-only wallet, and I was just going to import the #1 trader on the leaderboard so we could look directly at their wallet. Now, I don't, this wouldn't, of course, dox their identity. Anybody can go on chain and look at their trades. I was just going to kind of show what's already public information, but it definitely strikes me that it's strange. If you go back, 10, 15 years and think about the state of what people expected from financial privacy versus now, having it be kind of this relatively accepted cultural phenomenon that we get to just go look at your wallet and look at everything that you're doing. It actually would probably be surprising to tell, 20-year-old me that this was going to be the case. And I don't expect this to be the case forever. But I think Krunal's answer was very, very apt, because it's going to be a push and pull, right? Like what we've seen with Tornado Cash is that there's actually a risk to using privacy solutions, because even though what which wallet you're transacting between is obfuscated, the fact that you are using privacy solutions is not obfuscated. This is something where anytime you move into a system that has some sort of privacy, like people can see that you are using this product because you have to move from another transparent system or somewhere with KYC or something like that into this transparent system. Unless you're going out and buying Monero with cash from some guy you're meeting on the corner, there's no real way to be completely private. And so I think it's it's really exciting that this technology could potentially kind of obfuscate from random observers what my trades are, and I could actually have that kind of privacy that I honestly expect to be the standard in the future. But I think the big thing that also needs to change is a cultural push, right? Like everybody has to demand that privacy and push back when governments or corporations or anybody else doesn't want you to have it. If you don't have that cultural push where people are saying, hey, privacy is not a crime. I don't go post my my bank account statements on a telephone pole. Like, why would I put all of this information public? If you don't have that cultural push where people are actually demanding this as a right, then it's going to be very hard to utilize the technology. So I think it's a little bit of a push and pull. Like, yeah, it's very exciting that we could have a privacy layer, but will people use that privacy layer if it's not culturally accepted that it's okay to do that? I think that's kind of the big question in my mind moving forward.
Cool. Thank you so much, Bert. And now on to the question that I'm quite keen on, actually. ZK rollups like Starknet, ZK Sync, etc., can potentially make Ethereum more efficient and scalable. So my question is, do you think they will outperform Arbitrum or OP? How can these technologies improve Ethereum scalability? So I'd like to put Seabook on the pedestal for this one.
Okay, that's a very interesting question. So obviously, if you guys are familiar with the rollup technology, there are two kind of territory. One is the optimistic rollup, one is the ZK rollup. The optimistic rollup is kind of using tokenomics. It's kind of there's a challenge window. You bundle all the transactions together, and optimistically think you assume all the transactions are legit and good transactions. There's no malicious actors inside. Bundle them together and roll up to the layer one. And in the layer one, they have sort of a full proof. They are, okay, I see something wrong, I'm going to challenge. There's a challenge window like in 7 days. In the 7 days, you can challenge. If you win, you get a reward. If you lose, you slash your tokens. Basically, that's optimistic roll up. You can see it's kind of a game theory, lots of tokenomics involved kind of things. But ZK rollup using zero knowledge, which is the underpinning this technology is math and cryptography. Basically, you bundle all your transactions together along with the proof. So the proof and all the transactions bundled sent to the layer one. On the layer one, there's a set of contracts. We call them verify this proof. If this proof can be verified, which means theoretically it's safe. So all the transactions are legit and safe. So it's a two different way of doing things. So obviously, like optimistic rollup, currently Arbitrum and Optimism leading the way. They're really performance. They're doing really well, especially Arbitrum, right? We can see they have another kind of solution called Nova, which using a DA kind of things. Data committee or something. So basically, there's a group of people that decided to send the data together. So it's going to be more efficient. And in the ZK side, because you have to generate proof, which is not an easy thing to do. So from a Starknet perspective, they invented their own kind of language called Cairo. Cairo is a ZK-friendly language, easier to compile down to a ZK circuit and generate proof. But other kind of ZK rollup solutions like ZK Sync and Scroll, they obviously have to, they call them ZK EVM. So obviously they adapt to the EVM because there are lots of developers who knows how to write Solidity, and they have to have a ZK EVM mapping to their circuit. It's a kind of one-to-one mapping. So obviously it's not going to be as efficient as optimistic rollup, but it's more secure, right? You don't have to rely on the challenge window of full proof. So in the Ethereum community, including Vitalik, they think the ZK rollup is the end game because it's more secure. It's using math instead of using human beings to make sure every transaction is secure and legit. So yeah, that's the current state.
Cool. Thank you, Sibo. Bert, I raise this to you. Do you have any opinions on that?
Yeah, so right now, Quenta is built on OP. And so I'll give a little quick background on why we decided to build on OP. One of the the main reason, of course, is because Synthetics decided to launch on OP, and one of the big advantages here is the EVM equivalence here. So it makes it very trivial to take a contract that you have on L1 and kind of deploy it with very few changes on L2. So that's a really big reason that Synthetics went this direction. And then, of course, we are reliant on Synthetics for our liquidity, which is another big reason, of course, to use these chains. And kind of one of the hurdles for anybody trying to move to a new chain is like, okay, you have users and TVL that you're kind of chasing. So you need to go after where the users are. What I'm hoping is that in the future, we could use something like CCIP to actually keep our liquidity on Optimism and then allow execution of trades on basically any layer. And this would kind of make it so that we can push the product anywhere that users are. And then eventually, maybe move liquidity over to a zero knowledge layer. There's definitely, as was kind of mentioned before, some advantages to having finality much sooner than 1 week. I guess we'll see how these optimistic rollups fare, and whether or not you're seeing people submitting bad transactions. But definitely, I agree with the idea that eventually finality is very important, and I would like to see that kind of happen right after somebody makes a trade. I think most traders would feel more comfortable with that. But yeah, ideally, I would like all this to be kind of abstracted from the user, right? Where we can put the liquidity wherever it makes sense, and then use something like CCIP to just allow people to transact anywhere that they are. That way, we don't have to worry about, where are the users? Where are we having to go to chase people down? We can actually look at what's the best technology for the use case. So that's kind of my opinion. I don't expect us to move to a ZK rollup anytime real soon, just because of these kind of hurdles of moving anywhere. But it's kind of my thoughts for the future.
Cool. Thank you, Bert. Now, finally, I'll leave it to you, Kunal.
Yeah, sure. So I might have an interesting take on this just because the Unix platform and its other set of products like its RPC infrastructure lives on both ZK rollups and lives on optimistic rollups, being Arbitrum, Optimism, even some of the lesser one knowns like Metis, Boba Network, ZK EVM, and recently ZK Sync. And so I think I like to picture things from the user's endpoints of their user experience. And one advantage that optimistic rollups currently have is if you're a trader or if you're just a general user, right now it's mostly cheaper to use optimistic rollups and it's faster to make trades with confirmation speeds and things like that, at least with the current solutions that are presented within ZK Sync and ZK EVM. And I think that matters a lot. In terms of scalability, ZK rollups are, pretty widely agreed that this is the end game solution, but I don't think they'll be the most adopted. And it's mostly because of the user experience that you'll see. And one shout out I would like to give out is to the Optimism team, and what they're trying to do actually is build a modular stack. They call this the OP stack. We're actually builders of the OP stack, and we have our own optimistic rollup app chain. And one of the benefits that can come out of the OP stack and that other projects are actually trying to replicate, for example, Arbitrum launched Arbitrum Orbit. Polygon has I think it's called Polygon Supernets or ZK Supernets. And then ZK Sync has their own name. I can't recall the name that they're giving it, but it's basically creating L3s and other networks that are basically tied to the host network. But what Optimism is doing is most people are confused that Optimism can only stay an optimistic rollup, but it's being structured in such a way that they can transition into a ZK rollup in the future if needed. And that's also one of the beauties that comes out of the OP stack, that you can launch your own app chain that can be a ZK rollup that uses the same existing code base that comes out of, what Optimism is running, or at least in the future will be running in a few months, hopefully. And like I said, I like to think of things from the user's perspective, and I think they're going to have a lot better time transacting on optimistic rollups, because I think, frankly, people don't care too much about decentralization. But I think optimistic rollups give a good enough amount of decentralization compared to maybe other centralized alt L1s like BSC or AVAX. And the experience that you'll get on those optimistic rollups are just better. So I think those will be the most adopted ones. Even if the industry will agree that ZK rollups are the end game, I think that the user experience is just too much better on those optimistic rollups. For example, on ZK rollups, you have to pay the entire gas fee for that block, because if nobody else joins your batch, then you're going to have to pay a really hefty gas fee to prove that entire transaction or that entire batch of transactions. And if the main selling points to L2s are that, at least to retail, the main selling points is that, you're experiencing these lower fees. People are starting to notice on ZK Sync when activity drops that sometimes they're paying like a $20 gas fee for a swap. And most people are, not trying to use some of these ZK rollups because of that. I think the experience will improve as there's a greater need to be pushed into those L2s. Like, for example, if we hit, let's say, bull season and meme coins are trading at an all-time high, we've seen this recently where gas prices get out of control. But I think right now the user experience is too poor that we see on ZK rollups. But I do hope that it does improve. And even if it doesn't, the existing optimistic rollups do have on the roadmap to allow them to transition into ZK rollups. I think Arbitrum does a very good job focusing on the user experience, and Optimism does a really good job focusing on the dev experience. And so you kind of get the best of both worlds within those two. And I'm very excited to see the future between both of them. But yeah.
Thank you so much. And this is the final question. Let's wrap it up. With the Cancun DNAB upgrade on the horizon, which is EIP 4844, I'm sure you might know about it. It aims to decrease rollup fees by nearly 20x, allegedly, and potentially increase transactions per second. What is your opinion on this upgrade, and how do you believe it will impact ZK Layer 2? And Sipuk, I'll leave it to you. Sure.
The Cancun, is it? How do
Yeah.
you pronounce that? Cancun, right?
Cancun.
Yeah, Cancun. That's another major Ethereum upgrades after the recent Shanghai upgrades. Obviously, Cancun introduced the blob, the new type of data structure. Currently, every roll up is through the core data, which is really expensive. So after the 4844, it's going to be a blob. So everything, I think, all the transactions bundled together will go through the blob type of data. So it's going to be way cheaper. That's made for the layer 2 roll up. So after that, I think you can see currently layer 2 still not cheap. I think Arbitrum still cost me like 30-40 cents to do a swap, something like that. And the Stacknet is the same. So after that, you can see maybe only 3 cents instead of 40 cents. So it's going to be way cheaper, I think. Let's see. So that's another major upgrade.
Thank you. Unfortunately, I think we are out of time. So first and foremost, I appreciate for everyone who's finally here, staying here. Thank you for staying and supporting this event. And thank you, Kunal and Bert, along with Bob and also Chi-Chi, if you're still there. Thank you for tuning in so late at night from the US. And yeah, if you do need to contact them, feel free to contact them via Twitter, via Discord, or Telegram as well. And remember that we're going to post this YouTube live online, and we'll eventually, obviously, post out more content in the future. So thank you so much, everyone, and thank you. Well,
Thanks, everyone.
Thank you, Bert.
Thanks, guys.
Thank you.
Thanks, everyone. Well, there's still alcohol. There's still food. No, I don't think it's food. There's still alcohol.
All right. Oh, Bert and Kunal, I'll probably message you online personally. Take it easy. And Chichi, thank you so much for your support on CNS. We'll chat soon.
So I'm like. Really? How much, man? What's your Really? Well, so are you